Welcome back to another weekly analysis video. This analysis is for the week of November 9th, 2025. As always, we'll start off with a weekly review of last week's price action and then move on into the analysis. So as you can see, we went through the gap that I was calling for. I would have liked to have seen a reaction there and maybe continued the bullish trend into a new all-time high, but instead we actually went right through the gap. This was the objective for the week, was just reaching that gap, and we did so on Tuesday, November 4th. Recall what I said in the video, that it could come back down to this orange line here, but I did not want to see that. I prefer it not to see that if it were a rally. We went through that orange line, came to it initially, wicked through it, came off of it, and now we're in this range. This is the stop run area relative to the 26,244 level. Okay. A little bit of insight into the future. We could bang around in here for the remainder of the year if it doesn't want to leave it. I'll get into more details going into the weekly analysis for next week, but just know that it could just meander in here for some time. Nonetheless, our objective was reached for the week of the gap, and we came down a little lower, much lower than I wanted to be honest, for higher prices, but here we are. Alright, now on to our hourly chart here. We see a more refined view compared to that of the daily chart. We have our open right here, Sunday, November 2nd, 1800. The initial rally into 26,244, that was Monday's price action, and then going into Tuesday, we see a decline in price action, closing in this gap in here, coming down, almost fell into the middle of the range between 24,786 and 25,515. Almost went in the middle of that, or the equilibrium portion of that range. Rallied away. Okay? Now this is where it's a little iffy in here during this time of week. So Wednesday we actually rallied through the relative stop run area of the 25,515 level, and it offered a nice bullish move initially. Okay, that could have been a day trade in the morning session for that particular day. But going into Thursday at the open, we see a large imbalance created through this area, very indicative of wanting to reach lower, and that's exactly what it did. Reaching lower into the middle here of this range, and even lower. It came all the way down to the lowest portion of that range, 24,786, and then rallying off that today, Friday, November 7th. So, when we get into the weekly analysis for next week, there are certain things that I want to see price do in order for me to resume the bullish trend. Otherwise, if it does not resume the bullish trend, that only means one of two things: consolidation for now, or lower prices. So we just have to weigh some things, and I'll discuss what those are. Alright, on to our 15-minute chart now. We see a more refined view compared to that of the hourly chart. Let's draw your attention into here where this red box is. This is where a lot of people would get caught off guard. Okay, so if you recall, I said that we would close in this gap, and I had preferred it to actually rally from here and not close it in all the way. It didn't do that. It went to the orange line that I said it could go to. Would prefer it not to go to, but it surpassed that and went almost down into the equilibrium portion of this range here. Okay, notice the rally in here. Okay, now there was a day trade in here that you could have traded the Wednesday morning session with in this area in here, and had a rally higher into the afternoon session. Okay, but notice how it went through this stop run area relative to the 25,515 level. So in most cases, that is indicative of bullish behavior. However, we still have to get through this range here. Okay. Once we see price come into here, we're monitoring how it reacts off of that. So right here, it retraces back down to the stop run area. It can do that. Notice how it meanders around it. Tries to go up one more time. This is a failure swing. Now once we start breaking down in Thursday's morning session here, this is the green light that indicates to us that it wants to run lower. Again, targeting this low in here. Okay, so this is the low that was targeted in there. Okay. Reaching down into the middle portion of this range. Okay, we go into Friday's trading and we can see it reach down a little lower into the very lower premium of this range and then coming off of that for the close. There are many trades in here, and in 2026, I'll be discussing more in-depth details on how to find these trades, actually utilizing these levels intraday, and providing more content in that regard. So with that being said, let's go ahead and move on into the weekly analysis for the week of November 8th, 2025. Alright, we're back on our daily chart for the weekly analysis of November 9th, 2025. So again, we have surpassed this gap in here, did not rally from it. Instead, we have come into this range in here. This is the stop run area of the 26,244 level, okay? Because we've had a deeper retracement than what I'd like to see, there's a few things that I am weighing out, and I'll discuss those now, okay? We're going into the end of the year. So we're concluding this year's trading, and in most cases, at the end of the year, price will tend to not have as much movement or consolidate into the end of the year. And this could be a consolidation area in which price could consolidate in and just trade in this range for the remainder of the year. Okay? Now, let's talk about Friday's price action and how we've seemingly rallied aggressively away from the lower portion of this range in here, which is the lower portion of the stop run area. Okay? In order for me to get back into the bullish trend that we've had for the majority of the year, it would need to trade through the top of this level with aggression and get through its relative stop run area. I would then go ahead and say, let's get back on the surfboard for bullish behavior and potentially make a new all-time high. Okay? At the moment, I don't see that. We're still in this range. So I have to weigh things out, and this is the boundaries that I'm trading within right now. Now, on the flip side of things, I'm also weighing out to see if this wick is overtaken in here. It would have to get below and trade through aggressively the middle portion of this wick. At that point, I would see this low of that wick being taken out and potentially even see lower prices into that. I don't want to see that. I don't think it's done going higher. Personally, I don't believe it's done yet. But now that we've re-entered this area, those are the things that I'm weighing out, and I'm wanting to see what price does. So for the meantime, I'm trading within this range until price shows me otherwise. So, with that being said, it's now a day trader's market, meaning you're stuck within this range, which, to be honest, is not a small range. This is a range of 729 points. Okay? That's a very good range to be working within. So it's not a small range at all. There's a lot of opportunity in that range. So this is a daily chart. So each candle represents 1 day of price action. So there's a lot of opportunity within this range. All right. So now let's go ahead and move on into the hourly chart. All right, we're back on our hourly chart now. And I want to draw your attention to where that roughly the middle of that wick is, which is this range in here. If we get below this level in here and we trade through it with aggression, okay? Now what do I mean by that? Aggressively trading through it means that it also trades through the 24,786 stop run area level, okay? Trades through that, we would then want to seek lower prices, okay? And the next objective would be in here. That's if we were to trade lower, okay? Now let's say it wicks through this area, wicks through into the stop run area. That's an optimal trade entry for all you ICT, the inner circle trader individuals out there. That's an optimal trade entry, and it would then rally to the premium portion of here, okay? So again, this is the range we're working within now because we've had a deeper retracement than what I've liked to have seen. Had this gap held, had the upper portion of this range held, this level in here, 25,515, we'd be seeking higher prices, but it didn't do that. So this is where you have to weigh things out as a trader. And based on the conditions that you're in, you then have to formulate a plan. So we have our boundaries in place. We know where we're trading. The opportunities for the moment are in here until price shows us otherwise as to what direction it wants to go. So that's what we're looking at right now. So let's move on to the 15-minute chart. All right, now into our 15-minute chart, we see a more refined view. I'm going to draw your attention again into here. Notice how price entered this range in here, which is the equilibrium portion of the overall range we're working within, okay? Notice how it entered it aggressively, it came back down, touched this level, and then rallied again, okay? I like seeing that. Now this indicates to me that it wants to reach higher into the premium portion of this range, okay? So we're very close to 25,272, and we have a liquidity pool in here, equal highs as ICT, the inner circle trader would refer to them as, okay? So we have this area in here that we could reach for, just simply based on looking at the chart, understanding that price came into here, came back down, and has rallied off of that sense. However, if we trade through these highs and into here, we have to gauge how price reacts in here because it could easily just come back into that range. And again, that's where that consolidation profile comes into play. Is we're working within this range until price shows us what it wants to do with conviction. Okay? So that's the overall premise for this week. Is working within this range, engaging to see what price wants to do, just within short-term trades, day trades, etc. Nothing long-term right now. Again, I don't think we're done going higher, but I have to weigh things out and see how we trade out of this range, if we trade out of it at all. It might be in here for a little bit. So with that being said, that's going to conclude the weekly analysis for the week of November 9th, 2025. As always, take care, and God bless.